Well, howdy there, folks. Welcome into today's video. 5 core subjects to speak about in this one here today. First one up here, Jeff Bezos is selling Amazon stock aggressively right now. Headline out of CNBC here today. Obviously, it's my third biggest position in the public count. This matters significantly. He's selling hundreds of millions of dollars by the day right now. So does he know something? I want to share my perspectives on that in this video. I think it's a very important subject. Second thing we're going to cover is Palantir. Best news ever, pretty much for Palantir, came out here today, and stock went down significantly when the greatest news they could have possibly had came out. So need to speak about that. Third thing is Nvidia earnings obviously came out. I want to give you my thoughts on Nvidia earnings. Am I considering buying Nvidia after another shocking beat on top line and bottom line and another phenomenal guidance as well? Okay, we'll speak about that. Fourth thing is there's a stock that's crashing right now after hours, and I gotta say the stock actually looks pretty darn appetizing. So we'll speak about that, talk about that stock. I'll show you what's going on there and why it could be an appetizing opportunity. And the last subject we'll cover in this one is a Instagram post I made about 5 years ago, almost 5 years ago now at this point in time. It's a post from December 2018. It's going to help a lot of you out significantly, that post. I appreciate everybody joining me as always. Thanks so much for being here. Thank you for being subscribed. And am I the only one, or is it just like the sun's dark? Yeah, like it's completely pitch black by like 4:30. Like the sun goes down so dang early this time of year, especially here in Vegas. It's ridiculous, man. It's like literally 4:30 and it's pitch black outside. Like, holy smokes, okay? Appreciate y'all joining me. We are only 2 days away from the massive Black Friday sale. Make sure you get access to that. Pin comment down there, enter in your info, and we'll send it over. Get access to my #1 stock market course ever. See the moves I'm making in the market each week, how I diversified, plus be part of that Discord chat. It's pretty much your last chance, because tomorrow it's probably a 50-50. I'll produce a video, and then Thanksgiving I'm for sure not making any videos. So if you want access to that for that Black Friday deal, enter now, and we'll send it over. And every one of you guys, unless you already have that course, or unless you're already in my private stock group, you need access to that. Believe me, okay? Don't miss out opportunity. So, headline out here, Jeff Bezos aggressive again Tuesday, selling more Amazon stock after unloading shares last week. Jeff Bezos is expected to be aggressive in selling more shares, according to David Faber, who works for CNBC. Bezos may sell as many as 8 to 10 million shares, which would amount to roughly $1 billion worth of stock, if not more than that. It comes after Bezos sold $240 million worth just last week. He's dumping shares fast here, okay, very fast. I mean, this is like, now, supposedly the money's supposed to go to nonprofit organizations. I don't know. The bottom line is, there's a significant position for me, right? Third biggest in the public count. If I take a peek at the Patreon portfolio, it's my 4th biggest stock, right? And so I'm like, damn, does Bezos know something here? Or does he think Amazon stock's about to tank, the market's about to tank? Well, I looked a little deeper, and I'll find something very interesting here, okay? Very important. Check this out. It's unclear who Bezos donated the shares to. A representative for Jeff Bezos did not immediately respond to a request for comment. Bezos, the third richest man in the world, worth about $170 billion, still owns around 988 million shares of Amazon, about 10% stake in the company. So the first thing we got to keep in mind is, although he's selling quite a few shares here, 8 to 10 million, out of his share count, it's actually an extremely small amount. The man owns almost owns 1 billion Amazon shares. It's ridiculous, okay? So it's actually a very small amount. The other thing I think is fascinating is Bezos has said previously that he expects to sell at least $1 billion of Amazon stock a year to fund his rocket startup, Blue Origin. And he also started this $10 billion Earth Fund thing to combat the effects of climate change. So the bottom line is, Jeff Bezos basically is penciled in to sell, I would say, $1 billion to $3 billion worth of stock a year in and year out. So if he sells $1 billion or so worth of shares here, it's about right. It's about right. So when I look at this as a shareholder of Amazon, am I concerned? It's 4th biggest position in the Patreon portfolio, 3rd biggest in the public count. Am I concerned? And the answer is absolutely not. No. If he was dumping way more shares than that, if he was selling $5 or $10 billion worth of stock, I might say, okay, what's going on here exactly? But this lines up exactly with previously what he said he was planning to do. So it doesn't come as a surprise at all. And plus, Jeff Bezos just moved down to Miami. Dude's living the life, okay? There's no, like, at this point, he's so stupid rich, and he's really showing no ambition of necessarily, being too involved in these businesses at this point in time. Like, dude's just out there living life. I think he's about to turn 60 this year. I mean, what more can you want? I mean, he's flying around private jets. He's got houses all over the place. He can buy anything he wants. There's nothing left to this game unless you want to keep playing the game of money. And I don't know if he really cares that much about it anymore. It seems like he's like, I worked so hard for so many years, sacrificed a lot, and I just want to have fun and respect. Do what you want to do, right? Second subject up here, Palantir in the debacle in regards to that whole situation, right? Palantir got, the greatest news you could possibly get, pretty much. They won an absolutely insane, about a $600 million contract. Now, by the way, it's ridiculous the way this is framed on all these publications. I'm looking, Palantir wins controversial company, Peter Thiel, blah, blah, blah. I'm like, gosh, man, it's ridiculous. It's ridiculous. There's a lot of companies that I would think would be controversial with the data. I do not think Palantir is one of those. But, this is a huge, huge deal. Huge deal for three core reasons, okay? I call these the three big ones, okay? The first reason this NHS deal is massive is, $600 million roughly the contract's for. That's a significant sum of money, okay? That's obvious. The other two, I think, are a little deeper and more important, okay? The second part is Europe in general, I think, is going to be a market that on the government side is going to be able to, I think, to expand a lot over the coming years because of this NHS deal. I think now that Palantir has landed a huge deal, this NHS contract, I think there's going to be a lot more government entities that say, you know what, maybe this Palantir company's not so bad after all, and maybe we need them a whole lot more to solve our problems and issues than we previously thought, which we do know these government entities have no clue what they're doing in regards to using data, having that data make better decisions. Bottom line is, plus these governments are loaded up on debt now at this point in time, these governments have to get more efficient. And Palantir is one of the few serious options you have for getting your either business or your government into a much more efficient place, right? And the third thing is, I think this is something that is going to help expand their European commercial market over the coming years. Because when I look at a deal like this, such a like so many people are hearing about this massive deal, NHS deal, right? $600 million. I think if you run a big, large company in your European market, I think you've got to look at Palantir a lot more serious now at this point in time and say, what is this company from America doing over here? Like, what do they got going on? I think you've got to look deeper after a huge contract like this that's all over the publications, all over the place, okay? So I think the European market in general, which has really been a lagger over the past few years, I think that could pick up significantly, not only in 2024, but in 2025, 2026, and in future years. So I thought that was really good news. Now, it was my worst stock here today. Let's call it what it is. Palantir was down 7% here today, down $8,500. It took away a pretty significant amount of the gains, right? We're down to $60,000 in gains there. So that was a big hit. But why do I think the stock fell despite having such great news? Because there's no bad news in this. This is just freaking phenomenal. Like I said, it doesn't really get better than this. So you got to ask yourself, how the hell is that stock down 7%? Like, shouldn't it have been up 7%, 10%, 15%? In theory, yes. The stock should have been up 7, 10, 15, 20%, whatever, okay? But that's not the reality of the stock market. The reality of the stock market is this is a very specific situation. And I spoke on this in the reaction channel here today. And if you watch that video, you know what I said in regards to this. I said this is a perfect example of what? Perfect example of buy the rumor, sell the news. It's a famous saying in the stock market. If you've been in the stock market for any amount of time, especially if you've been in for years, you're going to have heard that over time. Buy the rumor, sell the news. Like, everybody knew this deal was coming. There was a lot of hype and excitement going into it. And then when the news finally dropped, the stock dropped 7 percentage points. Buy the rumor, sell the news. It played out exactly like that for Palantir. So as a long-term Palantir bull, I'm just happy, man. This is a massive win for Palantir. And like I said, on the branding side, it goes way bigger than the $600 million they can make off this deal. It goes into way more European government deals over the coming years now at this point in time. And I think the commercial players are going to wake up to Palantir as well. Because NHS, they could use anybody. The fact that they're using Palantir means, and believe me, they didn't want to use Palantir. They didn't want to use Palantir. They're forced to use Palantir. I'm telling you, they wanted to use any other company other than Palantir. The bottom line is, I guarantee you, they saw the results that Palantir can give, and they realized that this is by far and away the best option we have. For guys that didn't want to use that product to say, damn it, we got to freaking use it, that speaks volumes. Believe me, there's no one in Europe that was rooting necessarily for Palantir to win this contract because of the way it's been branded, Peter Thiel, and controversial and all this stuff. I'm telling you guys, this is massive, massive, massive. Buy the rumor, sell the news in regards to that one. Okay. Next up here, Nvidia. Let's talk about their earnings, and am I expected to buy the stock after these crushing earnings? And we'll talk about the crashing stock that I think looks pretty appetizing, and a few other things. Okay. So in regards to Nvidia, killed it. 402 per share EPS adjusted versus 337 was expected. Revenue 18.12 billion versus 16.18 was expected. So roughly a $2 billion beat on revenue. Huge beat on the bottom line. I mean, their business is explosive everywhere. I mean, the net income is shocking. Shocking. $9.24 billion in net income. This company now has net income of $3 billion plus a month. This coming quarter, they might do $4 billion a month in net income. Not revenue, net income. So think about the sorts of cash flows this company's starting to produce. Think about what they could do with all that money. I mean, if you got $3 or $4 billion in net income coming in per quarter, I mean, think about what you can do with that. You can buy other companies. You can buy back massive amounts of your shares. You can just hoard cash. I mean, it's incredible. Absolutely incredible. I was looking at Nvidia's long-term debt, and based upon what they're making quarterly now at this point in time, they could pay off their entire debt load in less than a quarter. That's incredible, right? Now, guidance was phenomenal as well. They got it for about $20 billion of revenue for this upcoming quarter, which implies nearly 231% revenue growth. From what I saw, analysts were a little under $18 billion. So basically, the guidance is about $2 billion ahead of what analysts was expecting. And remember, they continually, whatever NVIDIA's guided for, they've come in and beat those. So it's very possible that NVIDIA comes in with a 21 or a $22 billion number, like something insane, right? It's very, very possible. And that's with their H200 still, that's coming, that's more of a second half of next year story as far as all that goes. And in terms of name dropping in that NVIDIA conference call, they named everybody. I mean, pretty much every company you want to be associated with, they named them. Salesforce, Microsoft, Meta, Tesla. I mean, they went through ServiceNow, like they went through their list of clients on different, and I'm like, they have everybody. Every freaking buddy is using them and wants to use them, right? Very misunderstood story about Wall Street, by the way. They have no clue what's going on here. And they just think like anybody can do this. And come on, man, these are the best tech companies in the world. They're the most intelligent companies in the world. And they're all buying NVIDIA chips. Why? Because they have to. They have to, okay? The income statement was simply one of the greatest income statements, if not the greatest income statement I've seen in my 15 years being in the stock market. This is an A++. This is Michael Jordan in the 90s, okay? Look at this. Revenue, $18.1 billion versus $5.9 billion in the same quarter last year. Cost of revenue only went up to $4.7 billion versus $2.7. Think about that for a moment. I mean, you're talking about cost of revenue only went up about $2 billion when your revenue went up about $12 billion. Like, what are we even talking about? That's insane. Gross profit went from $3.1 billion to $13.4 billion. They actually kept R&D in check. Their R&D was only up about $300 million on a year-over-year basis, which when your revenues are up it's $16 billion, $12 billion roughly on a year-over-year basis, and your research and development is only up $300 million, that's like nothing. It's nothing. Sales general administrative hardly went up for the company. Total operating expenses was only up about $400 million when their revenue was up like $12 billion. This is insane, okay? Operating income, $10.4 billion operating income versus $601 million of operating income in the same quarter last year. Net income, $9.2 billion versus $680 million in the same quarter last year. Diluted EPS, $3.71 versus 27 cents. My gosh, is that perfection? That's freaking perfection. Now, some Wall Streeters out there are talking about the stock's expensive, right? And that's two subjects I want to speak about. Is the stock actually expensive? And then I want to talk about the stock price reaction after hours and what I think is actually going on there, okay? So, first off, I hear a lot of these Wall Streeters, the stock's expensive. And I'm like, based on what? Because it's not based on facts. Every time I hear a Wall Streeter say the stock's overvalued, I say that Wall Streeter knows nothing about running valuations at all. At all. The bottom line is, if you look at NVIDIA's growth rates, and even if you were to assume they slow down significantly, the stock is still actually insanely undervalued. Here's the deal when it comes to NVIDIA, okay? Trading at about a 29 forward P, Now, that's what analysts had going into today, right? Now, do you think analysts' expectations are right or wrong when it comes to their EPS projections? Well, guess what? Probably way wrong. They're probably way too low, as they've been quarter after quarter after quarter. High probability Nvidia does $20 to $25 of earnings per share next year, okay? That means the company's likely trading at a true forward P right now of 25, maybe even 20. With these sorts of growth rates, and once again, even if it slows down to 30%, 20% growth on the revenue side, I mean, that's still ridiculous. Whichever way you want to slice it, they're still way too undervalued. Even if their revenue growth only got to 20% next year, which would actually be really bad considered, they're still super undervalued. Like for a revenue growth company at 20%, trading at a forward P of probably 20 or 25 right now, come on, man. That's a steal deal. Steal deal. This has even gotten me considering buying Nvidia stock. I'm strongly considering it right now. And I mean strongly considering it, okay? Now, the stock price reaction, right? It actually didn't go up, even despite the massive beat on revenue, massive beat on EPS. The guidance was super strong, right? The conference call was overall very positive, and yet the stock's not moving. Why is that? Well, a lot of people on a stock like Nvidia like to play calls, like to play puts, like to play games with this stock, okay? Figuring the stock was going to pop huge one way or another. Either it was going to crash down or it was going to spike huge, right? And maybe a little market maker says, we're going to crush all y'all. This is a worst case scenario. Because of how many people want to play calls and puts on a stock like Nvidia, the worst case scenario, the only case that they really couldn't have is the stock hardly moves. And to see that stock down only 1.5% after hours, I'm like, what? And it's very possible that they close the stock this week flattish, which would obliterate all the people playing calls and puts on the stock. The bottom line is, based upon those results, the stock should be up, in theory, 10 to 20% after hours. The fair value of Nvidia right now is around $750 for the stock. I think that's conservative fair value as well, when you consider the growth rates this company has currently. So when I look out there at Nvidia, I look at a company that is several years in front of the competition. The Wall Streeters don't understand the story around Nvidia. They think like, oh, I hear them keep talking, the competition. Oh my gosh, sounds like Tesla. I've been hearing that in Tesla for 7, 8, 10 years now. The competition's coming. It's like, okay, whatever. Yeah, you've been saying that for 10 years now, and it still hasn't come. When I look at Nvidia, they're now talking about the competition. I'm like, where's it coming from? They don't understand the big tech companies are working on very low-end chips compared to what Nvidia has. Do you think if the big tech companies could make chips similar to what Nvidia has, you think they would be ordering all these Nvidia chips like crazy? No, of course they wouldn't. It wouldn't make any dang sense. If these other big players want to make any chips, whether it's Metas or the Microsofts or any of these companies, they're going to make low-end chips. They're not going to be. You can't just pop out and be like, we created an H200. We're ready to sell it. It doesn't work like that. Are you kidding me? And then have the software to go along with that? I mean, it's just like, these Wall Streeters, they don't understand tech very much, so they just think everybody can be replicated. And it's just like, I'm just like, what are we talking about here, man? They don't understand how the hardware works. They don't understand how the software works or anything like that, right? And so the moral of the story in regards to this Nvidia situation, I'm actually considering starting a position here because I know the stock's gone up so much, but it's all irrelevant, man. All that matters is where Nvidia is going over the next few years. That's all that matters. And the answer is probably a lot damn higher. Like, there's not too far in the future, I wouldn't be surprised if people are paying $1,000 for Nvidia. Unless their business completely collapses, which just doesn't look in the cards. And Nvidia Jensen on the conference call just committed to growth through 2025. They asked him about that. He said, yeah, growth through 2025, which takes a big boogeyman out of the market. All right? So, yeah, Nvidia, man, it's actually a damn steal deal. A steal freaking deal. Next one up here. There's a crashing stock out there that actually looks pretty darn appetizing, okay? And then we'll get to my old IG post. So here's what the company's putting up for numbers. They did $618 million in product sales versus 605, so a little bit of growth there. Net royalties was up for the company about $6 million year over year. Net revenues, $651 million versus $633, so growth there. This is a retailer, by the way, and most retailers, many retailers can't grow right now. They actually have shrinking revenues. So the fact that this retailer is growing revenues in this environment right now is a very positive signal. I mean, extremely positive signal. Cost of product sales was down to 55.3% of revenue versus 57.5% in the same quarter last year, which is good. Gross profits up to $291 million. That's 44.7% of overall revenue, which is very good to see, very good to see. But there is a problem with this company. They have very bloated selling general administrative right now, SG&A, very bloated. They went from 33.6% in the same quarter last year. Now they're up to 36%. So that's a real trouble spot, and that's why I have that circled red there, okay? Earnings from operations is up to down to 8.4% of total revenue. Once again, that's really because that SG&A hurt them. So $54.7 million in earnings from operations. Now, they had an income tax benefit here, so it made their net earnings, their net income, their EPS look way bigger than it should have been in reality. I'll just put it like that, okay? So net earnings overall was $59 million, 9.1% of revenue. But once again, that's because there's a huge income tax benefit there, when usually you would have no benefit there. If anything, it's a cost, like as it was last year in the same quarter, right? So, obviously, if you flip numbers around, let's say they had $11 million expense there, right, versus a benefit. I mean, that completely changed the net earnings in their EPS. So don't get too excited about the EPS growth and the net income growth overall, okay? So the income statement looks pretty good for this company, especially considering they're a retailer and they're growing in this market. And what company is this, okay? This is a company. Guess. I like them as a retailer. I do. I've been in Guess stores many times. I like them as a retailer. They compete, I would say, kind of at the mid-end of retail overall. They certainly aren't going to sell you the cheapest products, but they certainly aren't going to sell you the most expensive products. So I think they kind of cater to maybe a little bit of the upper middle class type consumer overall. And I think it's very common for a person to spend $100 or a few $100 when they go to Guess overall. Now, stock's crashing after hours. It's down 14, almost 15%. Who knows what the move is tomorrow? I think some of it will be based upon if we're in some sort of situation where the market gets hit heavy tomorrow. Let's say Nvidia's down and just puts an overall damper on the market. And who knows, maybe Guess is down 20%, 25% tomorrow. We'll see. If the market goes risk on, then maybe Guess comes back a bit here. But it's a big move down. And so I look at a stock like Guess, and I'm checking the stock out, and I'm saying, oh my gosh, it's trading at about 7 times next year's expected numbers? I mean, what? That seems exceptionally low, especially if they get their SG&A kind of worked here, right? Now, the revenue growth for this company is really sleepy. It's like a 2% type revenue growth story, but that's insanely cheap for Guess overall, especially when you consider we're in a climate right now of bad retail sales for the most part. So I'm like, dang, there might be an opportunity here. There might be a freaking opportunity here. But on the flip side, here's a problem. They just double missed earnings, okay? They missed on earnings per share. 49 cents versus 62 cents was expected. They missed on revenue. 651 versus 655 was expected. So they double missed. So that's not good. Wall Street doesn't like when you double miss, especially in this market. No, you're going to get slaughtered for that. Also, I looked here, and I like to look at the past quarters for this company. Damn, they're missing a lot of quarterly numbers. 5 of the last 8 quarters, they missed earnings per share. 5 of the last 8. They had a really nice kind of cycle and turnaround the business model going in the last few quarters. They beat. But 5 of the last 8 are misses. So that's where I look at it and I say, well, if it's trading 7 times next year's expected numbers, which seems insanely cheap, can I be confident that that's an accurate number, right? And when you miss 5 out of 8 quarters, I'm not sure about that. So I need to do more digging on Guess, but that forward P has me really intrigued, and the income statement overall outside of SG&A has me really intrigued here. So I need to do more digging and see maybe this is a stock I buy. I put on my watch list for now, which my watch list just keeps expanding. I just cut that baby down about a week ago, and it's already expanding again. I'm like, oh my gosh, like too many damn stocks I'm interested in potentially buying here, okay? Next up here, let me show you my IG post from many years ago. Where is this dang IG post? Where did I put that thing? Where did I put that IG post? Oh my gosh, I'm going to have to find it for you guys. Where's my IG post? Oh no, it didn't come through. All right, hold your horses. Hold your flippin' flapjack and horsies. I'm going to go ahead and send that through. Alrighty, folks, I found the IG post. I said, so as I sit here on Friday night, December 7th, 2018, I see countless great stocks trading at insanely low valuations in comparison to their future growth potential. I see most companies valued like we will have a pretty good sized recession in 2019. it is possible, as it is every year. If we do have a recession in 2019, then all this makes sense. But if we don't, this is one of the best buying opportunities of my life. Regardless of what happens, short term, I am a long-term player, right? And I posted that out there. And if you've been following me since December 2018, like, shout out to you. Let me know in the freaking comments, because that's a long damn time to be following me. That's like 5 years. Like, I appreciate you in a huge, huge way, okay? So here's what was going on. I found this from Zacks on December 7, 2018. U.S. markets closed mostly lower on Thursday, so there was a rest for Chinese tech behemoth Huawei CFO in Canada significantly dented investor hopes of a solution to trade-related concerns. However, the markets recovered to a significant extent following the news that the Fed may reconsider its aggressive rate hike policy this month. Both the Dow, S&P 500 ended in the red while the Nasdaq finished in positive territory. The Dow Jones Industrial Average closed just under 25,000. Today it's like 35,000. The S&P 500 index dropped to 2695, which right now we're probably at, 4,400, I think, on the S&P 500 or so. The Nasdaq closed at 7,188, which the Nasdaq today is about 2x that, okay? About 2x that. And that's even with all the crap we've dealt with over the last 5 years, which is a long list of crap, including Rona, including the highest inflation in, since the 70s. Like, we've dealt with a lot over the years, right? And I said, what were some stocks trading at back then that are just like huge name companies, like Nvidia, Apple, Microsoft, those sorts of stocks? And obviously, we've been talking about Nvidia in this video. Nvidia closed December 7, 2018 at $36 a share. It's $490 a share after hours right now. $490 a share. Apple, another obviously super famous company in 2018. That stock was trading at $42 on December 7th, 2018. That's what it closed at. It is a $190 stock now at this point in time. So the stock, about 4x'd? About a 4x in Apple stock price over the past 5 years or so. That's pretty incredible. Mr. Softy, Microsoft stock, obviously another super famous, huge company. $104 that stock closed at on December 7, 2018 is $373 a share. It closed at here today, right? So, what is the moral of this story? Buy the dip. Buy the dip. There's always going to be things to worry about. Build your portfolio bigger, stronger, better, again and again and again, and never get scared out. Because there's going to do a million things to try to scare you out of this market. They're going to do this, they're going to do that, they're going to talk about this, they're going to talk about that. They're always trying to scare you out. There's a million things to scare you out, and price action, and this, and this, and they're going to do it again. They're going to do some stuff next year to scare you out of this market. They're going to do some things in 2025 to scare you out. 2026, they're going to do some things to scare you out. The only suckers are the ones that always get scared out. The bottom line is, whenever you get those big dips, those are the best opportunities. But you always need to be taking advantage of deals out there in the market. This is why I buy every single week. Every week in the public account I buy. Every week in the Patreon portfolio I buy. Every week. Take advantage of deals, folks. Remember that. Remember that, okay? They're going to do a lot of things. Don't get shaken out of the market. Build stronger and better and better and better, okay? Appreciate y'all joining me as always. Thanks so much for being here. Thank you for being subscribed. Make sure, last chance to get in for that Black Friday deal, folks. It's only 2 days away. Make sure you get access to that. You need access to that. Unless you've got that Become Master Stock Market course before, or unless you are already in my private group, you need access to that, folks, okay? Pin comment down there. Enter in your info. We'll send you over the deal when it drops on Black Friday. It's a one-day sale, okay? Much love and have a great day.